Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 166, recorded here on May 11th, 2025. This podcast is for entertainment only and is not investing advice. Do your own homework. We are at block 896280, Moscow time 961. Fees are at 133. And we'll start with the market news update outlook and then get into the weekly Bitcoin news. Check out this week's featured post on the Bitcoin Fortress Substack. Do a little look ahead. And we'll end with shout outs. Jumping into the market news, Wall Street on Friday ended marginally lower for the week as market participants digested a slightly hawkish interest rate decision from the Federal Reserve that was offset to an extent by positive sentiment on trade after U.S. President Donald Trump announced a deal with the United Kingdom. The Fed's Monetary Policy Committee on Wednesday kept the key federal funds rate unchanged as widely expected. It also warned of a potential stagflation risk. We think our policy rate is in a good place as we wait for further clarity on tariffs, Fed Chair Jerome Powell said in his press conference afterward. While the Fed remains in wait and see mode, there was progress on trade. Trump said on Thursday that the U.S. had reached a breakthrough deal with the UK, which will provide increased access for billions of dollars of U.S. products. Trump also expressed optimism that China wanted to make a deal ahead of talks between Treasury Secretary Scott Bessent and representatives from the Asian nation. The first quarter earnings season also kept chugging along this week. Walt Disney was one of the biggest names reporting. The world's second largest entertainment company announced plans to open its first Middle East theme park in Abu Dhabi and delivered a quarterly beat. For the week, the S&P 500 slipped 0.5%, while the tech-heavy Nasdaq Composite shed 0.3%. The blue chip Dow fell 0.2%. Looking ahead, Wall Street's focus next week will be on trade. A busy economic calendar, a speech by Federal Reserve Chair Jerome Powell, and the first quarter earnings season. Market participants will be hoping for some positive news out of trade talks being held between U.S. and Chinese officials in Switzerland. Trump this week announced a trade deal between the U.S. and the United Kingdom, the first of its kind since his imposition of sweeping reciprocal tariffs in April. The economic calendar will feature key updates on inflation, including the Consumer Price Index for April. Traders will also be watching out for remarks from Fed Chief Powell at a conference in Washington, D.C. Last week, the central bank maintained its key policy rate and warned of a potential stagflation risk. Finally, the earnings season will feature hundreds of companies this week, including Dow 30 Components, Cisco, and Walmart. Also in focus will be 13F filings, regulatory disclosures by major funds of their quarterly equity ownership changes. Moving into the Bitcoin news, we'll start with the Hodler's Digest. We'll see what's relevant here, and we'll skip the shitcoinery unless it's funny. U.S. federal court for the Southern District of New York has sentenced former Celsius CEO Alex Mashinsky to 12 years in prison for fraud. We'll jump into that in a little bit more detail later. Mashinsky's legal team sought a light sentence. They highlighted his spotless record before the Celsius incident, along with his military service and willingness to plead guilty, but U.S. prosecutors were less inclined to leniency, suggesting on April 28th that the judge deliver a 20-year sentence for his actions. Betting markets predicted a light sentence ahead of the May 8th hearing. Polymarket showed only 11% odds for a 20-year sentence or higher. Boy, they'll bet on anything, won't they? U.S. Vice President J.D. Vance will speak at the Bitcoin 2025 conference in Las Vegas, roughly a year after then presidential candidate Donald Trump spoke at the same event. According to a May 9th notice from the event's organizers, Vance will address conference attendees in person on May 28th, making him the first sitting U.S. Vice President to speak at a digital asset conference. Trump provided a pre recorded video of himself from the White House to the organizers of the Digital Assets Summit in March, his first appearance at a crypto event since taking office in January, and spoke in person at the Bitcoin 2024 conference in Nashville while campaigning. Michelle Bond, the wife of former FTX Digital Markets co-CEO Ryan Salame, who faces federal campaign finance charges, is pushing for dismissal on the grounds that U.S. prosecutors deceived her husband in a plea deal. In a May 7th filing in the U.S. District Court for the Southern District of New York, Bond's lawyers reiterated some of the claims Salame made in opposing his plea deal with the government, which ultimately still led to him serving time in prison. She claimed that prosecutors obtained a deal with Salame through stealth and deception by allegedly agreeing they would not file charges against Bond. Mr. Salame and Miss Bond's attorneys were advised that the agreement to cease investigating Miss Bond could not be placed within the four corners of the Salame plea or other written agreement, but the government still offered it as an inducement to induce the plea, said the filing. Zerebro Dev's death in question as proof surfaces on X. Hmm, that sounds like shitcoinery. Eh. For months, Cointelegraph took part in an investigation centered around a suspected North Korean operative that uncovered a cluster of threat actors attempting to score freelancing gigs in the cryptocurrency industry. The investigation was led by Heiner Garcia, a cyber threat intelligence expert at Telefonica and a blockchain security researcher. Garcia uncovered how North Korean operatives secured freelance work online even without using a VPN. Garcia's analysis linked the applicant to a network of GitHub accounts and fake Japanese identities believed to be associated with North Korean operations. In February, Garcia invited Cointelegraph to take part in a dummy job interview he had set up with a suspected Democratic People's Republic of Korea operative who called himself Motoki. I guess you better tighten up those interview procedures. Let's see what else here. Prediction of the week. Bitcoin is attracting parabolic price targets as bulls continue to hold six figures on May 9th. Data from Cointelegraph Markets Pro and TradingView show barely any consolidation taking place on BTC USD over the past 24 hours. Reacting, market participants have begun to restore their faith in the broader Bitcoin bull market. November 2024 monthly candle was the breakout signal on long-term charts. Popular economist Axel Kibar told X followers in his latest post. An accompanying chart compares November 2024 to similar breakout events in the past, with Kibar reiterating his existing $137,000 target. Trader and analyst Matthew Hyland joined those forecasting new all-time highs in Q2. In his latest video update, $160,000 or other, quote, crazy numbers, he said, could come into play if bulls stay in control, and a key leading indicator, the relative strength index, supports further upside. And as I always say, Bitcoin's price will do what it will do. Stay humble, stack sats. Almost 60,000 Bitcoin addresses tied to Lockbit's ransomware infrastructure were leaked after hackers breached the group's dark web affiliate panel. The leak included a MySQL database dump shared publicly online. It contained crypto-related information that could help blockchain analysts trace the group's illicit financial flows. Ransomware is a type of malware used by malicious actors. It locks its target's files or computer systems, making them inaccessible. The attackers typically demand a ransom payment, often in digital assets like Bitcoin, in exchange for a decryption key to unlock the files. Pseudonymous on-chain sleuth and security analyst Zach XBT claims to have identified an additional $45 million in funds stolen from Coinbase users through social engineering scams in the past 7 days alone. According to the on-chain detective, the $4.5 million figure represents the latest financial losses in a string of social engineering scams targeting Coinbase users, which Zach XBT said is a problem unique among crypto exchanges. Over the past few months, I've reported on nine figures stolen from Coinbase users via similar social engineering scams. Interestingly, no other major exchange has the same problem. A hacker involved in the $4.67 million exploit of the decentralized finance lending protocol Voltage Finance in 2022 has moved some of the stolen Ether to Tornado Cash after a short hibernation. Blockchain security firm Certic said in a May 6 post to X that the 100 Ether worth $182,783 at current prices was moved from a different address initially used in the exploit, but can be traced back to the hacker. In March 2022, the exploiter took advantage of a built-in callback function in the ERC-677 token standard and allowed them to drain the platform's lending pool through a reentrancy attack, according to Certic. Adam Back says, asking him if he's Satoshi isn't crazy speculation, and that he has empathy for those who buy Bitcoin via the ETFs. Justin Sun, the astronaut, Vietnamese TradFi firms launch traditional national blockchain, Korean crypto exchanges delay withdrawals due to scammers, and more. And finally, mentally ill users might be accidentally jailbreaking ChatGPT into reinforcing their delusions. Encrypt uncovers new LLM exploit embedded into images. Okay. And there's links to all of this. This article is in the show notes, and there's links to all that other stuff, if any of that interests you. Moving on from CoinDesk, Bitcoin challenges 105,000 on positive weekend macro headlines. The crypto bull move continued into the weekend thanks to a trio of positive macro developments. Likely most responsible for the move was a President Trump Truth Social post regarding trade talks being held in Switzerland between the US and China. A very good meeting today, said Trump. Many things discussed, much agreed to, he continued. A total reset negotiated in a friendly but constructive manner. We want to see, for the good of both China and the US, an opening of China to American business. Great progress made, all caps. Earlier Saturday, Trump also announced a full and immediate ceasefire in the brewing war between India and Pakistan. Completing the trio of good news, Russian President Putin said he was in the mood for serious talks with Ukraine and suggested talks without preconditions in Turkey next week. Bitcoin rose to just a few dollars short of 105,000 before pulling back to the current 104.5, ahead 1.5% over the past 24 hours. Ether has continued its recent outperformance, up 7.7% over the same time frame. But we don't care about Ether. As promised, a little more detail on Alex Mashinsky. This is from Crypto Potato, updated on May 9th. Former Celsius Network CEO Alex Mashinsky was sentenced to 12 years in federal prison on Thursday. The decision follows his December guilty plea to organizing a fraudulent scheme that misled investors and manipulated the market value of Celsius's native token, CEL. The U.S. Attorney's Office, Southern District of New York, announced Mashinsky's prison term on May 8th. The founder and former chief executive officer of Celsius Network, LLC, and their affiliated entities was sentenced to 12 years for committing commodities fraud and securities fraud at Celsius. U.S. District Judge John G. Hettle delivered the verdict in courtroom 14A of Manhattan's Southern District Courthouse. It comes nearly 5 months after the former crypto executive's guilty plea, in which he admitted to exaggerating Celsius's financial stability and promising investors unsustainable returns. Alexander Mashinsky targeted retail investors with promises that he would keep their digital assets safer than a bank, stated U.S. Attorney Jay Clayton. In fact, he used those assets to place risky bets and to line his own pockets. During the court session, Mashinsky acknowledged his role in artificially boosting the price of CEL tokens while quietly selling tens of millions of dollars worth of his holdings. The accused also agreed to forfeit the proceeds from his illegal activities. Prosecutors had pushed for a 20-year sentence, arguing that the ex-CEO remained unrepentant and emphasizing the widespread damage to the crypto lender's customers. Federal authorities also said that Mashinsky made a profit of $48 million from the scheme. Ultimately, the 59-year-old accepted sentencing guidelines of up to 30 years and waived his right to appeal any prison term within that range as part of his plea deal. Mashinsky's legal troubles began in 2023 when he was apprehended on charges of securities, commodities, and wire fraud. His arrest coincided with Celsius's agreement to a $4.7 billion settlement with the Federal Trade Commission, one of the largest in the agency's history. However, the deal is still contingent on the firm returning customer assets. In September 2023, former Celsius Chief Revenue Officer Roni Cohen-Pavan admitted guilt in the same case and agreed to cooperate with authorities. This provided key insights into the company's inner operations. His testimony contributed to the broader case brought against Celsius and Mashinsky by the Securities and Exchange Commission and the Commodity Futures Trading Commission for the multi-billion dollar fraud scheme. Although the former executive initially denied the accusations, his guilty plea and Thursday's sentencing conclude a case that exposed a serious misconduct at one of the most high-profile crypto lending firms. So another bad guy pays the price. Stay away from shitcoiners. Alex Mashinsky is a shitcoiner. And you can't trust centralized exchanges. There you go. Next up from Bitcoin Magazine. This was posted on May 9th. New BIS report says Bitcoin use surges during economic stress. A new report from the Bank for International Settlements shows that Bitcoin and other cryptocurrencies are being used more during times of economic stress. This happens mostly in countries where inflation is high, it's expensive to send money, or the government limits how much money can leave the country. People turn to Bitcoin and stablecoins like USDT and USDC when their financial systems stop working properly or become too expensive to use. This is especially true for small international payments. Crypto gives people another option when they can't rely on banks or traditional money systems. The report suggests what many people in the crypto space already believe: Bitcoin isn't just for investing anymore. In some places, it's a real lifeline. When the value of local money drops fast, or when it's hard or too costly to send money across borders, people turn to Bitcoin to keep their money safe and to send it faster, cheaper, and with more control. The BIS also found that when countries try to control how money moves in or out through capital flow management, crypto use often goes up. In other words, people use Bitcoin and other crypto to get around these rules. Using data from crypto exchanges and app usage patterns, the BIS mapped cross-border transactions of Bitcoin, Ethereum, USDT, and USDC from 2017 to mid-2024. Cross-border crypto flows skyrocketed from under $7 billion in Q1 2017 to over $800 billion in Q4 2021, before falling to around $400 billion in 2022 during a crypto market slump. However, they rebounded to approximately $600 billion by Q2 of 2024. At first, Bitcoin made up about 80% of those payments. Now that number is below 25%, with more people turning to stablecoins. This shift doesn't mean Bitcoin is less useful. It just shows that people are choosing different tools for different needs. Unlike regular banks, Bitcoin use doesn't depend much on where you live or what language you speak. The report says people use it when they need to, not just because it's popular. Also, when global financial stress goes up, measured by things like the VIX, a market fear index, Bitcoin use also goes up. This shows that even investors and businesses use crypto more during uncertain times. Fascinating. All right, next up, is from bitcoinnews.com. This was posted on May 10th. Oregon passes law officially recognizing Bitcoin as collateral. Oregon has officially signed Senate Bill 167 into law, making digital assets, including Bitcoin, legal collateral in financial transactions. Governor Tina Kotek signed the bill on May 7th, updating Oregon's Uniform Commercial Code to allow the use of digital assets like Bitcoin as collateral in secured lending. It adds Article 12, which outlines the legal framework for controllable electronic records, which includes digital assets, tokenized records, and electronic money. SB 167 says digital assets can be used just like traditional collateral. That means individuals and businesses can use Bitcoin or other digital assets to secure loans or financial agreements. Before this, there was a lot of uncertainty. Companies and financial institutions weren't sure how Bitcoin would fit into the law, especially when it came to using it in commercial contracts. Now, SB 167 removes that doubt. It also updates Article 9 of the UCC to allow digital assets such as Bitcoin as collateral in secured transactions. It also recognizes electronic records, electronic signatures, and hybrid transactions, opening up more blockchain based business activity. This gives important legal clarity, which could encourage more institutional investors to enter and participate in the market with more confidence. Oregon is now one of the first states in the US to clearly define and support the use of digital assets in the legal and financial systems. Analysts say it could trigger similar moves across the country. In fact, the momentum is already building. Arizona and New Hampshire have already passed significant Bitcoin related bills this week. In Arizona, Governor Katie Hobbs received a lot of criticism after vetoing Bill SB 1025. After that, she was presented with another Bitcoin related bill, House Bill 2749, which she did sign into law, creating the state run Bitcoin and Digital Asset Reserve. This new fund allowed the state to take custody of unclaimed digital assets after 3 years of inactivity use them to generate value through staking or airdrops. Jeff Wenninger, chair of the Arizona House Commerce Committee, said digital assets aren't the future, they're the present. We've built a structure that protects property rights, respects ownership, and gives the state tools to account for a new category of value in the economy. Arizona also has another bill, Senate Bill 1373, pending with the governor. If signed, it will allow Arizona's treasurer to allocate up to 10% of the budget stabilization fund into Bitcoin, turning it into a strategic financial hedge. And above all that, New Hampshire became the first state in the US to legally enable the creation of strategic Bitcoin reserve thanks to House Bill 302. These developments show that state governments are starting to take Bitcoin seriously, not just as a speculative asset, but as part of the formal financial and legal system. Another Oregon bill, House Bill 2071, has also been introduced. It seeks to protect the rights of individuals and businesses to use digital assets for lawful payments and peer to peer transactions. Although still in early stages, the bill shows Oregon's growing interest in blockchain and Bitcoin innovation. And you'd love to see it. Also on adoption, this article's from Bitcoin.com news. This was posted a day ago. Steak and Shake goes full crypto. 100 million can pay with Bitcoin next week. Now, I have not heard of this chain. I guess there's a couple in California, but they seem to be concentrated more on the East Coast, uh, kind of moving into a little bit into the Midwest. But anyway, Steak and Shake announced on May 8th on social media platform X that it will begin accepting Bitcoin as a form of payment at all of its restaurants in the United States starting May 16th. The decision signals the company's entrance into the digital payments landscape, with the chain preparing to modernize its point of sale systems to accommodate decentralized currency. The company stated, Steak and Shake accepting Bitcoin payments at all locations starting May 16th, making the cryptocurrency available to our more than 100 million customers. The movement is just beginning. As of March 26, 2025, there are 393 Steak and Shake restaurants operating across the country, according to data from Scape Hero. These locations span 23 states and territories and are situated in 295 cities. Florida leads the store count, hosting 79 restaurants, approximately 20% of all U.S. locations. A distribution map shows that the highest concentrations are in the Midwest and Southeast, while other regions, including the West, feature fewer locations. Steak and Shake's embrace of Bitcoin was preceded by several teaser posts. On March 4th, the company responded to a question on X about Bitcoin adoption with "Hodl your Bitcoin, eat the fries." 3 days later, it asked followers, should Steak and Shake accept Bitcoin? These remarks stirred anticipation within the crypto community, eventually culminating in this week's formal announcement. This step toward Bitcoin integration comes as digital assets continue to gain institutional and political traction. President Donald Trump has emphasized pro Bitcoin policies, while the U.S. Securities and Exchange Commission appears more open to crypto innovation. Arizona and New Hampshire have enacted legislation recognizing Bitcoin as a reserve asset. While concerns around volatility remain, crypto advocates see moves like Steak and Shakes as a pivotal shift toward normalization of digital currency in everyday commerce. So, pretty cool. Like to see it. Adoption, good. And you can't stop it. That's the nice thing. And you have to get used to, like, anybody using Bitcoin, including people you don't like. That's just how an open protocol works. Next up, and last but certainly not least, from Cointelegraph, this was updated yesterday. El Salvador stacks 7 Bitcoin in last week despite IMF deal. What's going on? The governor, the government of El Salvador continues stacking Bitcoin for its national crypto reserve despite an ongoing deal with the International Monetary Fund, stipulating that the Central American countries stop using public funds to purchase Bitcoin as one of the conditions for a loan agreement. According to data from the El Salvador Bitcoin office, the country acquired an additional 7 Bitcoin in the last 7 days, bringing its total holdings to 6,173 Bitcoin, valued at over $637 million. El Salvador's Bitcoin office has continued its steady pace of Bitcoin acquisitions months after the IMF agreement was signed and shows no sign of halting its Bitcoin purchases. The Central American country is one of the only nations actively purchasing Bitcoin in open market operations, and its national Bitcoin treasury strategy will serve as a blueprint for other countries also considering Bitcoin strategic reserves, according to crypto industry executives. El Salvador signed a $1.4 billion loan agreement with the IMF in December 2024. As part of that agreement, the government of the country agreed to rescind its Bitcoin legal tender law and make Bitcoin payments voluntary. The agreement also stipulated that El Salvador must scale back its Bitcoin accumulation, refraining from using public funds to fund its Bitcoin purchases. Additionally, the deal required the government privatize the Chivo wallet, which was publicly funded but saw little use among residents. In January 2025, lawmakers in the Central American country repealed the Bitcoin legal tender law in a 55-2 congressional vote, although this did nothing to pause or slow Bitcoin acquisitions. The IMF issued another request to the country to halt Bitcoin buys in March 2025, reiterating the original terms of the agreement. However, El Salvador's President Nayib Bukele pushed back against the request. Bukele emphasized that the country would not stop its Bitcoin purchases or slow down its accumulation of Bitcoin in the face of mounting pressure from the supranational financial institution. No, it's not stopping. If it didn't stop when the world ostracized us and most Bitcoiners abandoned us, it won't stop now, and it won't stop in the future, Bukele wrote in a March 4th X post. Okay, I guess El Salvador is going to keep, what is it? 1 Bitcoin a day makes the IMF go away, maybe? We'll see. All right. And then finally, I wanted to mention this week's featured post on the Bitcoin Fortress Substack. Article is entitled The Best Places for in the world for Bitcoiners and sovereign individuals. So check that out. I will put a link in the show notes. And looking ahead to future Bitcoin Fortress Substack posts. Coming up on Monday, we have the Byzantine General's Problem. And then followed by Bye Bye Passwords, Understanding Passkeys 2FA and the Future of Secure Logins. And then a brief history of financial crises. That followed by a little piece on Bitcoin's upturn controversy. Then what would the Austrians think of Bitcoin? Followed by layers of the internet, layers of Bitcoin, and Bitcoin adoption by US states. So lots of cool stuff in the pipe on the Fortress. Wanted to shout out Fountain supporter at God's Death. Thank you, sir. 500 sats. Appreciate it. And with that, I will thank you all for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can follow my Substack. It's at bitcoinfortress.substack.com. And you can follow me on Nostr. My NPub is in the show notes. And with that, I will talk to y'all next week. Have a great one. Bye bye.